Hi, I'm Khleif. Each and every week, I record an interview with a thought leader that I know you're going to get a ton of value from. Now, here on YouTube are the video versions of my podcast, Lifetime Cash Flow Through Real Estate Investing. Now, to make sure you get the latest information, please subscribe and hit the notification bell. Let's get started. Welcome to another edition of How to Build Lifetime Cash Flow Through Real Estate Investing. I'm Khleif, and I'm thrilled that you're here. And I'm super excited to interview my friend today. His name is Singh. He goes by KK Singh, and he started out as a system engineer. In fact, he's certified Microsoft system engineer, and he became a very successful entrepreneur. And he's now a business owner, and we're going to talk about that. He owns gas stations and laundromats, and he's got started like many of us in the single family space. He's in northeastern Indiana. But now he's in around, approximately over 2,500 doors as both a limited partner, a passive investor, and also as a GP. He has syndicated his own deals now. So we've got a lot of stuff to talk about. And I love the fact that it's him because he's my friend. So welcome to the show, KK.
Thank you very much. It's my pleasure, Rod, to be on your show.
Yeah, well, listen, I have really enjoyed getting to know you. I love your energy and your beautiful personality, positive personality. I know you've been to 3 of my events, and I'm grateful for that. And like many investors, you see the value of this business being a team sport and the value of networking. But let's get started with, give us just a little background on you, KK. And I know that you've got 10 plus years of business experience in India, where you're from, and then, almost 20 years here in the United States. Maybe you could give us a little bit of your background and history.
I came to United States in 2000 as a Microsoft certified system engineer, and I lost my job after 2000 and 9/11, 2001. So I decided to move on to the gas station business because some of my friends were in the gas station business. So I partnered with them on one of the gas stations and got into the gas station business and never looked back. So we kept building our gas station business, and actually we did a deal today for the 9th gas station.
No kidding. Congratulations. That's awesome. So you're still in that business. It's not like you've moved from that to multifamily. That's just that was the precursor to your entrepreneurial endeavors. So 9th gas station, fantastic. Wow.
Yep. I do have really good family and friends with me as partners, and they manage all my gas stations, and I am fully into the real estate business.
You are, okay. And so let's talk about that for a minute, because you've been doing the gas stations for a very long time now. It sounds like almost 20 years just in the gas stations. Talk about how you say you have friends and family that help you run them. Has any of that, and that, to me, and I'm a multiple business owner as well. Anytime you can have people that you trust, that you empower, that you have faith in, run a particular business, that frees you up to do other things. I'm in that place right now in this business. Talk about some of the things you've learned, and some of those relationships have helped you to get into the multifamily space.
Rod, the thing is that I have been in the partnership for the last 20 years, and none of my partners ever left me. And we didn't have to leave any of our partners behind, and some of my employees became my partners as well.
Wow.
So they have been with me for about 20 years, but I have always kept their share as well. So I have treated them very fairly. I never try to use anyone, but so they are happy with being me as their leader. And I am the one who does most of the acquisitions. So I go do the numbers, talk to the sellers, and make deals and everything. And they are the ones who do the operational part. So after 1 month, I don't go for a year sometimes to a gas station, because I have made the system. I have put everything in their computers that they would need, and then they take over, and the operational part, they do the operational part.
So you have set up the systems. You've taken the time to set up those systems. And as you guys know, every business is nothing but people and systems. So you've taken the time to set those systems, which has given you the freedom to go off and focus on acquisitions and real estate. Yes?
Correct.
Yeah. Okay.
Correct.
And how did you empower, because guys, this business is a team sport. So we're not talking about gas stations here. We're talking about building teams. How did you empower your people in the gas station business? Because that's a great example of building a team and leveraging a team. How did you empower them and validate them? Can you drill down on that a little bit?
Yeah, sure. I treat all my partners as my family, and most of them are my family. They're my daughter, my son-in-law, my nephew, and some people who I've done everything for them. So they're very near and dear to me, and I try to be very fair. So they are always happy with what I say, and they agree to what I give them, the shares in the businesses. And they like to grow with me. So none of them have ever said, okay, I'm going to go sideways or with another partner. But the reason is because we want to grow together. And I believe in, if you got to go far, you got to have a team, and you got to have some partners. You go further with other people and your team. Okay.
Well, you've said some key things there, and one of them was you treat them like family. And guys, when you're in this business, really, the relationships are such a big piece of it. And what is a relationship? It's a friendship. So it has love, it has support, it has validation, it has all of these things, and of course, growth. In fact, growth is a basic human need. People need to feel like, particularly in any relationship, they need to feel like they're growing. And so that's a critical piece. For my team members, we just had an event here at my house, at my compound, where we did ideas for improvement. And when you allow people to add value to the whole, to the business, to the entrepreneur, you trust them enough to allow them to make suggestions. And I have a lot of fun with it. We did it for almost all day. It was incredible because some incredible ideas came out of it. I'm like swimming with ideas from these amazing people that are on my team, and it allows you to grow together, and because they're enrolled, they're enrolled in the outcome. Would you agree with me on this, KK?
Sure. And if where I am today, I would have never been here without my partners.
Yes.
And they would have never been there without my help either.
Right. It's amazing how you need them, they need you, and when there's mutual respect, and like you said, use the word fair as well. And I live by that word. Okay. And as it relates to my students, my coaching students, and that is the operative word is what we're doing fair. And if someone, for example, wants to cancel from one of my live events, I always ask myself that the word, are we being fair to them? And then are they being fair to us? Is there integrity in this relationship? Love it. All right, well, let's shift gears. I just wanted to, because you're such a successful entrepreneur, I wanted to just add some value as it relates to team building and building a business, because that's really what we're doing here, guys, is you're taking off your entrepreneur hat, you're putting on your employee hat, you're taking off your employee hat, and you're putting on your entrepreneur hat. And so, all of these pieces come into play. You systemize it because it's a business, and then you've got to take care of your people like their family. I love it. All right, well, let's talk about now your transition into real estate, because I know you started passively, correct?
Actually, I bought single family houses before I started passively.
Okay. That's right.
Yeah.
That's right. So let's start.
I got an offer from a church member. I think he was 82 years old, and he offered me a portfolio of 40 single family houses. And we didn't know what cap rate means at that time. So we didn't know anything, but he was very trustworthy and helpful person. So we decided to buy his properties, and we bought all his 40 single family houses. and I started managing myself to learn the real estate business. And soon I realized that I have a passion for real estate, but with single family, I cannot grow much.
Right.
So we decided to move into multifamily, and with multifamily, we did give some LOIs, but they didn't get through. The reason was we didn't know much the business, so I decided to learn the business before do a next deal. So I invested passively in my first deal in Dayton, Ohio.
Okay. Okay. Well, and obviously, I started in single family as well. I just didn't get the memo until after I had 2,000 houses. You're just much smarter than I am, my friend. And so, there's no question that multifamily is the way to go. And so you just decided to go in passively on someone's deal. So talk about your first couple of passive deals and maybe what you learned and why you selected that particular operator. And I don't want to drop names, but the pieces of the deal and how it was presented to you. Maybe speak to that experience on that first passive deal. Because guys, the reason I'm bringing this up is so many people start passively and then they end up becoming active, just like KK has done here. And so I want to talk about what that looks like, because it's a great way to start, frankly. So if you could speak to, the nuances of that deal, why you selected that person, and let's start there.
Yes, when I was doing my research to find a passive for the passive investment, and I followed some syndicators and learned about them, and did talk to them over the phone. Mm-hmm. And slowly I built up relations with them, had several calls, and I decided to go and talk to one of them. So we had a meeting, and I took my list of questions. Here's my 42 questions that I ask every syndicator before my passive investment. So I went there with my questions, and he answered all my questions. And I wanted to start in the multifamily space immediately. So I gave him a check for $50,000 because he had one of the deals that was ready to go. So that's how I stepped into the multifamily space.
Okay. So KK, I know you've been in as a GP in 2 deals now, and I know you're also out there helping people on Facebook and adding as much value as you can. That's just your nature, which is why I consider you a friend, because I just think that's a beautiful thing. And as it relates to, in adding value to people, I know you came up with a list of questions that you think a passive should ask a GP or an operator, when they're screening a prospective deal. So let's go through that list. You shared it with me, and I loved it, and I took it and tweaked it and expanded it and even shared it with my students because I thought it was so well done. So if you could speak to some of these questions that if someone is passive, let me rephrase that. If someone is interested in investing in a deal, from their armchair passively, what they should ask or look for in the operator.
Well, when I started doing the research, I figured it out that the operator is the most important person in everything in this multifamily space. So I did spend some time preparing my questions to ask a sponsor. And with these 42 questions and with your expansion, I think you can definitely find out the answer to your questions and also figure out whether you want to invest with this operator or not.
Well, so let's go through some of them, and we'll go ahead and attach them to the show notes on this call, but let's go through some of them. So if you just kind of, read some of them and I'll interject when I feel it's necessary.
First of all, I want to know who is the actual controller of the deal, because there are several pieces to the deal, the syndication deal. I want to know who is actually a controller of the deal. And then I want to know how many deals he has done before. Does he have experience as a controller of the deal? And the third thing I want to see, if something happens to that syndicator, is there somebody who's going to take care of? Does he have really good partners as well?
Right.
And then I want to see how long experience does he have? Is he just starting out, or does he have a long experience? And also I want to know what markets does he focus on, or also whether he wants to just depend on the cash flow, or does he want to add value to the property and also raise the rents, etc. So does he really want to do something with the property, or just buy the property and depend on the cash flow?
Let me stop you there for one moment. So the difference there, guys, is a yield play versus a value add deal. And there's some very large investors, I'm not going to name any names, that are focused on yield plays. They're buying very, very high-end properties on the anticipation and hope that the rents will go up. I'm here to tell you, in my opinion, that's dangerous, especially where we are in the market cycle. So I would recommend you look for people that want to force appreciation by adding value. Please continue, KK.
And then I want to see their fee structure, their syndication structure. So I like to see all that before I make decision, and then I do my own underwriting as well. So just to make sure, and also I do my own research as well. I research the market after researching the syndicator, and then I would go to that market and research the market. So whether is it job growth, the population growth, the crime rate, and all that kind of stuff, the median income of that neighborhood. So I can dig right in deep into the neighborhood level rather than just researching the whole Atlanta city, and then it could be across the street, it could be a bad area. And I have had this experience in one of the gas stations. At daytime, it used to be a really good gas station. At nighttime, it used to turn into a ghetto area. Yeah. So I had that experience. So I transformed this, and I always, when I do my research, I always think about my city. So if I have a gas station in a low income neighborhood, but there could be 1 mile, there could be a Starbucks because it's closer to the downtown. Mm-hmm. So I do all kind of research, and also I have.
What do you use? What websites do you use? I just want to hear if there are any others that I haven't spoken about.
I use several websites. I have a whole list of websites. I keep that in my Evernote, mm-hmm. and I use mostly city data, mm-hmm. for the crime, and dig deeper into the deeper, and then housing alert, CoStar reports. Housing
alert is one, city-data is one, CoStar, sure. If you have that access to that, is fantastic. Okay. Yes. Okay. Fantastic. So what else?
And if you don't have a CoStar report, you can ask for a CoStar report from the syndicator.
Yeah.
Yeah.
You bet.
Yeah. And then I look at the sales comps and also the rent comps in CoStar reports.
Mm-hmm. Yeah. So you dig deep. You dig deep, and probably a lot more than most passive investors do. You know, I've got your list of questions here, and you know, like one of the questions, I don't know if this was yours or my tweaking, but you know, you want to know what the syndicator's target market is, and are they specialists in that market, or are they all, you know, are they generalists? You definitely want specialists, and you might want to ask them what their criteria is. You know, because again, questions like this and will help you understand the business more as well. And so many people go from being a passive to becoming an active as they're learning. While they're being a passive investor, they're learning, and so you know, and yeah, your question, I see your question on here. What if one of the KPs falls ill, or there's, you know, God forbid, gets hit by a truck or something, but yep. and then you know, some other questions is that you have, and I think this was yours, is how you plan to manage the cash flow. You know, when are distributions going to happen? Are they monthly? Yep. Are they quarterly? Who does your accounting? You know, and I don't know if you added this or me, but who's the transactional law firm you're working with, and who's the syndication law firm you're working with? Sometimes they're the same. just again, this is for you to become more educated and do some more research. How do you communicate with your investors? That's a great question. What's your communication policy? Is it webinars? What's the frequency? Is it phone calls? Have you ever had a failure? And how'd you deal with it? What happened? I'm the poster child for that one. Have they been full cycle on a deal? That's a great question to ask, because there are a lot of investors that are just getting rolling. I'm stealing your thunder here, buddy. I just wanted to help out a little because these are some great questions, and a lot of these were yours. Are they going to? How's the management going to be handled? Who's the third-party property manager? Are they going to do it themselves? What do you know, or can you find out about the management company? That's such a critical piece of this. Correct? Okay.
Yep.
Yeah.
Of course, and even the asset management. You want to know who's going. I mean, if it's the syndicator has like 20 properties, and if he's doing the asset management himself, how many
Right.
he can do at the time.
Right.
So he's not basically putting the full time into that property,
Right.
which you might be a part of. So
Right.
I want to know all that before I invest. And
Right.
I suggest to your listeners to do all this homework before they invest in any property in multifamily to cover their risk.
If you're going to give someone your money, by God, you better know what it is you're investing in, my friends, which is why come see me in Baltimore. I'm going to be in Baltimore September 27th, 28th, 29th. Get an overview of this business before you give someone your hard-earned money. And it's just critical that you have some basic understanding of what it is you're doing. And because there are some, frankly, there's some stupid deals being done right now. Deals that haven't been stress tested properly and by operators that are unseasoned. So just really need to be careful. Questions like, as it relates to stress testing, how have you stress tested the deal? Well, talk about that. Have you looked at what happens if you're 25% vacant, for example? What's the operating reserve you're holding? How big is it? Rainy day fund in case something happens. Let's see, what else? What are we forgetting here, KK? How long they plan to hold the property? What's the business plan?
Business plan. Their underwriting, whether they're writing it conservatively or not. So, and what's the exit? A little bit of exit cap rate can change the whole bad deal into a good deal.
I'm sorry, could you repeat what you said? Because I didn't quite understand. Did you say the exit cap?
Yeah, exit cap.
Okay, yeah. Guys, when they're doing a pro forma, if you see the same cap rate on a prospective sale in 5 years that they're buying at today, that run the other direction, okay? Because they're diluted. Certainly, you have a higher cap rate. Now, some people say 25 basis points a year. We do at least a 1% cap exit cap bump on our deals, and so that's the kind of stuff you need to understand well enough that you can evaluate the deal properly. And then of course, what are the returns? What's the cash on cash return projected? What's the internal rate of return projected? You want to look over their pro forma and their expenses and see, if they make sense, if they're doing a value add, does the vacancy increase while they're doing that? I mean, it's common sense things that you want to be looking at. KK, pop in here anytime.
And one thing is very important too, when you're looking at the rent comps, you must do your own research because I have seen a lot of people not comparing apples to apples. They're comparing the other party's 1-bedroom with your 3-bedroom.
Right. Or an A-class property with a C-class property, or a property with different finishes and amenities. Like I tell the story. I have a friend of a friend that screwed this up, where the property was evaluating was separately metered and the tenants paid their own utilities, and he compared it to one where the owner paid gas and water, and he lost out on a deal he could have flipped or wholesaled and made $1 million. Just because he didn't compare apples to apples. So do your own homework. Okay. And then, you want to ask questions like, why'd you pick this market? Why'd you pick this property? And then shut up and let them talk and really let them sell you on the area and the property. But Yeah. Let me look here. I'm looking at this list of questions. I really appreciate you sharing this because it was awesome framework for questions. But listen, if you guys want this, it'll be in the show notes. And awesome. Well, listen, my friend. You are such a treat. Are you going to make it to Baltimore, by the way?
I will be there in Denver before that. Yes.
Okay. Oh, yes. KK is a member of my multifamily boardroom mastermind. That's right. We're going to be in Denver in July, and there's over $5 billion in assets in that group now. It's like become this incredible, massive group. I have a great surprise guest coming to Denver, and and so yes, we'll see you in Denver, my friend. Yeah.
And let me tell you, Rod, how that last mastermind in San Diego impacted my business.
Okay.
So in these goals here, I wanted to be a GP this year. When I wrote my goals, I wrote that in my goals that this year I'm not going to be investing just passively, but I will be a general partner on some deals too. So when I went to your mastermind in San Diego, Jeff Greenberg was sitting beside me, and he asked me what I wanted to do. I told him that I wanted to be a GP, and he offered me a deal.
Fantastic.
He said, we have a deal here, and if you can raise this much money, and we can bring you as a general partner. And I raised money in about 4 days.
Wow. Fantastic. Okay. Fantastic.
Yep.
Now you're playing an active role in that property. You're a GP
yes.
playing an active role in that property, which is critical.
Yep. I sit on the asset management calls every week and learn a lot from from very experienced guys there.
Right. Fantastic. And that's how this is done, guys. And so, thank you for, that's amazing that happened in San Diego. I remember meeting your family there, and so we this mastermind, guys, this is for seasoned operators like KK and it's proximity is power. That's our tagline. And that really is the truth of it. Who you are is who you hang around with. And here's a perfect example. Another example is David. David's 23 years old, and he aligned with Glenn, who's got 4,500 doors, and now they're partners and doing deals together. And they met in my mastermind here at my house the first time. So, guys, you be around those that are doing what you want to do, that think what you think is hard is easy, and your success is inevitable. As long as you take action, your success is inevitable. KK, it's been such a treat to have you on, my friend. I really appreciate you, and I look forward to seeing you in Denver in July, and then in September at the Baltimore event. Guys, if you're interested in Baltimore, it's rodinbaltimore.com, and I hope to see you there. Tickets are still ridiculously cheap. Cheap's the wrong word. My team's going to kill me for saying that. They're very reasonable. It's me for 3 days teaching. There's no outside speakers selling anything. It's just me. So I'd love to see you if you can make it. Thanks, KK. Great to see you.
Thank you for having me on your show, Rod. It's
Absolutely.
My pleasure.
Absolutely, buddy. Take care. Talk to you soon.
You too. Thank you.
Hey, thanks for watching. Please subscribe to my channel. And if you listen to podcasts, join me on iTunes, Stitcher, or wherever you listen to those podcasts. Just search for Lifetime Cash Flow through Real Estate Investing.
Any investment opportunities mentioned on this podcast are limited to accredited investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws.